Hello student, this is Assistant Professor Manoj Supekar. For the today's lecture, we will be talking about very important concept of cost and management accounting, that is marginal costing. For the today's session, here we understand the all aspects of marginal costing, meaning of marginal costing, advantages of marginal costing, formulas of marginal costing, and what are the exact application which will be important for the business. So these all things we will discuss step by step for this today's session, and you will be get the correct idea about the marginal costing as soon as end of this lecture. Now we will start this session with the first part, that is called as an introduction. There are a lot of name of marginal costing in various countries. Marginal costing is also known as variable costing. It is also known as incremental costing. It is also known as contributory costing, and it is also known as direct costing. So there are the different name of the marginal costing, but in India we say it's a marginal costing. Marginal costing is a concern with the determination of product cost, which consists of direct material, direct labor, direct expenses, and variable overheads. It should be kept in the mind that variables per unit are fixed and fixed cost per unit are variable with changes in the level of output. In United Kingdom, there is a name of marginal costing, and in a different countries also the different name, which is we already discussed. Now, what is the exact meaning of the marginal costing? Student, as per the ICMA, define the very clear definition about the marginal costing. Marginal costing means the amount of at any given volume of output which by aggregate cost are change if the volume of output is increase or decrease by 1 unit. From the analysis of this definition, it is the clear that increase and decrease in 1 unit of output or increase and decrease the total cost from the existing level to the new level. This increase and decrease is variable cost from the existing level to the new level is called as a marginal costing. Now, there is one more very simple definition. Marginal costing means nothing, the cost of a product which is manufactured by the manufacturing concern. So that is called as a marginal costing. So marginal costing meaning we will understand with a very simple example. Suppose that in a one manufacturing organization, manufacturing 100 unit, and the total 100 units cost of production, suppose we consider, is 200. If organization change the production process and they decided, suppose if they want to manufacture 101 unit, then that time the cost of production will be goes by 2, it will be become that is 202. If organization suppose decide they want to manufacture 99 unit, then that time the cost is reduced by 2 and it will be 198. So that this is the increasing and decreasing 2, it means that nothing but that is 2 is known as a marginal cost. So in a simple manner, marginal costing means nothing, the cost of a last product which is manufactured by the manufacturing organization. So marginal costing means the ascertainment of the marginal cost and of the effect of profit of change in volume or type of output by the differentiating between the fixed and variable cost. So it is very simple cost, and marginal costing is a technique of costing. So what are the exact feature of marginal costing? As far as my concern, marginal costing is very essential to know about that the analysis of the business. Through this costing we can to analysis the business profitability. We can understand through this costing the exact fixed cost will decided through this marginal costing technique the BEP level of the business. But there are some silent feature of 5 feature of marginal costing. So the first feature of marginal costing, in the marginal costing the fixed cost and variable cost are considered separately. So there is no combined part of this one. So fixed costs are considered separately and variable costs are considered separately. While calculating of the profit, so it's very simple kind of the formula has to be followed, that is sales minus variable cost is equal to contribution, contribution minus fixed cost is equal to profit. So this is simple things. It means that through when company want to get the figure of profit, then that time fixed cost and variable cost are considered separately. Now, the second important feature of marginal costing is a variable or marginal cost is considered while calculating the product. Obviously, when want to finalize the final product cost, then that time variable cost, or you can say it's a marginal cost, is considered separately, as well as fixed cost also considered separately. So this is a very significant feature of this technique of costing. For a finalization of a product cost, variable cost is considered separately and fixed cost is considered separately. The third important feature of marginal costing is it is a technique of costing. So through this technique, company can understand, manufacturing organization can understand easily the cost analysis, profit analysis, expected profit analysis, expected sales analysis, BEP level, and margin of safety level also. So such all things through this technique, company can be analysis, manufacturing organization can be analysis in very or simple manner. The fourth feature of marginal costing is it is a good tool for the cost reporting and cost controlling. Obviously, the costing, the main intent of the costing is to know about that the cost of production, to know about that the how to control the cost, to know about the how to reduce the cost. So out of these are the main intent of costing. So margin through the marginal costing, very easily and systematically to get the correct idea, as well as we'll get the correct information how reduce the cost and how control the cost also. Marginal costing is very significant to cost reporting to the top level management for the getting of good benefit in terms of a profit. And the last important feature of marginal costing is a good for the cost analysis. Obviously, company want the different kind of the analysis for getting the estimated goals, the analysis of a profit, the analysis of a sales, the analysis of a future profit, the analysis of future sales, the analysis of break even point, the analysis of margin of safety, the analysis of a contribution. So such all analysis you can do company can be do with the help of a marginal costing. So these are the major and important features of a marginal costing. Now we turn to the next one part, that is the advantages of marginal costing. Now what are the significant of the marginal costing? So through the marginal costing, to get the very good benefits to the manufacturing organization. So the first important benefit is a clear profit planning and control. Obviously, marginal costing is very important technique. Through this technique, manufacturing organization has to be get the correct idea about the future planning. They can be make the systematic planning of the profit also, and definitely marginal costing with the margin costing is helpful for to know about that the future profit planning also, and even that controlling the cost of production also. Marginal costing is better for the decision making. Obviously, top level management, when you want to take the significant decision regarding for the product manufacturing, product selling, then that time marginal costing has been playing very vital role to take the prominent decision regarding for the product. Third important advantage is useful in the pricing decision. Obviously, when company want to finalize the final price of the various product which is manufactured by the manufacturing concern, so these all product pricing decision is based on the with the help of marginal costing has to be taken by the organization. The fourth important advantages is improve the cost control. Through the marginal costing, company can be control their cost of production. They can easily reduce the cost of production also. So marginal costing is very helpful and important tool for the manufacturing organization to controlling the cost of production. The fifth important advantage of marginal costing is a helpful in a performance evaluation. What is the exact organization profit percentage? What is the exact organization sales? What is the exact organization variable cost? What is the exact organization fixed cost? Manufacturing fixed cost? What is the exact organization manufacturing product total profit? So this kind of the evaluation easily has to be done by the marginal costing. So it is a very systematic and easy tool. Through this one, company can be make the systematic analysis of their performance, and it will be definitely helpful for the organization to opt a future goal of the organization. And the last important advantages is the support the strategic and competitive advantages. Obviously, the main target of the organization is a to maximization of a profit, as well as to sales promotion, to control the cost of production, to reduce the cost of production. So such all things systematically can be done by the organization, obviously with the help of a marginal costing. So in the entire session here we're talking about the some basic parts. The first one is the introduction of the marginal costing. The second one is the definition of marginal costing. The third one is the example of marginal costing. Next one, what are the silent features of marginal costing, and the prominent of significance, yeah, we can say advantage of marginal costing. So the rest of the part of the marginal costing as a formulas and other parts we will discuss in the next section. Thank you so much.